Hey, it's Clay Trader, and this will be a video chart on ticker symbol XXII. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price. And in this situation, makes mapping out a very logical question quite straightforward. And that question revolves around the fact that, sure, today as a whole was pretty rough, but to give credit where credit's due, the bulls did start to put together a bounce late day. So that brings up the question of, well, is there any sort of true power behind this bounce? Is this bounce actually a bounce? Or is it some sort of fake move, dead cat bounce, as we would say in the world of trading lingo? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it all revolves around a single level. And that level is right here at 89 cents, or excuse me, 88 cents. Why is 88 cents so important? Well, hopefully we can all agree on the logic that price movements with true power, with genuine strength, a bounce that is actually a bounce, is going to continue to progress forward. The bounce is going to keep on bouncing upwards, right? The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, a price movement with true strength is not going to go back to where it was. So with that in mind, think about 88 cents. Any sort of closes below 88 cents, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back to within this range on the day where it was, essentially at the lows. And going back to where you were, not a sign of true strength. Whereas let's say the price pulls back here, kind of like it did here, but then bounces around before heading back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set of lows down there. If you picture each one of these as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's what truly strong moves do, right? That's what a bounce is. A bounce keeps on bouncing. And as long as those lows keep getting higher and higher, then the bulls are still, are still in control. Are they in control right now? Yeah, to an extent, but is there any sort of longer lasting control? Well, that's where we need to measure progress. And again, defining progress as 88 cents. What about potential areas of resistance? At this point, just going to talk about one because it seems to be a pretty stubborn level, but right here at 92 cents, I'm not going to count the number of times, but you can see a whole bunch of times in the afternoon, the bulls try to fight up through that 92 cent area and just couldn't quite do it. So 92 cents, definitely key level of resistance going into tomorrow, but top priority, in my opinion, is not breaking levels of resistance. Top priority is building higher bases, so we'll see if the bulls can do it or not. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.